That stock is getting harder and harder to obtain, and prices will reflect this more and more as the narrative of silver abundance fades away. I suspect that if reputable firms like Bank of America are discussing it, the Silver Institute is discussing it, and other core industry participants are discussing it, that the tip of the iceberg is where we are right now.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci. Today's market rundown, we will go through the markets and we will discuss precious metals. There's a new report out by Bank of America, their commodity report for 2025, their commodity outlook. And I don't often say this. I do prefer to read reports by other banks. But when it comes to these bigger reports, I find Bank of America stuff very dry and authentic. And they write about silver. The last really good report I had about silver was from them. And they did a very detailed write-up about it, and we covered it here. But they circle back quite heavily with silver, almost as much as gold, which gets all the glory in metals, and shine a very positive light on it. And I don't take it as anything but genuine. Okay, so let's start with the markets themselves. Here we go. The 10-year yields are unchanged. The dollar is down 28. The S&P 500 is 6,002. VIX is 1454, down 7. Gold is 2631, up 6 near the top end of the range after yesterday's sell-off. Silver 3054, up 24. Copper is 411, unchanged. Bid WTI up 34, bouncing. Natural gas is up almost 5, firmly above $3 now. Bitcoin obliterated yesterday along with everything else that was commodities, right? At 92,965. Ethereum 3318, down 95. Palladium up 13 at 987. Platinum down 260 at 937. Gold silver ratio weaker, and we're going to be talking about that today as well. And the grains are all up. You don't see them on your screen. Wheat is 562, up 1%. Corn is 419, unchanged bid, and soybeans are 991, up 4 cents. Okay, what are we going to talk about? Well, there's the front page, right? The Fort Knox Post is still there. The world did not end by gold, but I did say in my first sentence, sell it first, then buy it. So sue me some other time. And then there's Judy Shelton's interview with David Morgan. Ooh, sorry, brain fart there. I don't have enough caffeine in me yet. All right. Bank of America says it's silver's turn in 2025. Now, we'll get into that. That's part of the report. The discussion today is silver's turn in 2025, and the premium will be Bank of America on gold and silver and copper as well. We'll be putting that up in another post later on today. We want to give you a preview of that right now, a decent preview, not just some mainstream media nonsense. All right, before we get started, I want to talk about China premium in silver, okay? China premium is real. It is persistent, and it shows everything many have said about global silver supply, including ourselves. Supply is being outstripped by demand. The gap is being filled by above-ground stocks. That stock is getting harder and harder to obtain, and prices will reflect this more and more as the narrative of silver abundance fades away. I suspect that if Reputable firms like Bank of America are discussing it. The Silver Institute is discussing it. And other core industry participants are discussing it, that the tip of the iceberg is where we are right now. We're no further than that. It is no longer a few silver bugs, people like myself. If you disagree and you think that the premium for silver, when it trades at premium in China, is a function of taxation, you should take it up with Bank of America, because they probably have a better argument to make than we do. Moving on. Okay. There's the homepage. You already saw that. We will talk about gold sell-off yesterday. Okay, in context. Discussion, silver's turn in 2025. Bank of America's top 5 themes in this year's commodity strategies report are: number 1, trade war and the strong US dollar may result in lower commodity prices, and they explain that very well. Number 2, Brent oil may trade near $65 a barrel on surplus fresh OPEC plus barrels. The backdrop for all this, by the way, is Trump's agenda. Gold will stay range bound for now, but still targeting 3,000 per ounce. So that says 2,300 to 3,200 range bound with an upward drift. Copper and aluminum may fall near term, then rally into the second half 2025. Comment on tariffs, okay? Grains look soft, but sugar, silver, or natural gas could push higher. Probably and natural gas could push higher, considering that it's already up. All right, so we're going to go through very simply the gold overview, the silver, a small section of the silver that governs the comments that I made up top, and we'll go through their comment about the gold silver ratio, and I'll give a little synopsis as to why I would agree or not agree with that. All right, so here we go. Gold overview, debt, wars, and inflation. After a series of record highs, gold sold off in the wake of the U.S. elections on concerns over rising rates, a stronger U.S. dollar, and linked to the latter, lack of appetite from emerging market central banks to keep adding gold if domestic currencies are under pressure from tariffs. Remember what I've said in the past, emerging markets are gold. Gold is an emerging market. Okay. That said, a bullish undercurrent persists with concerns over an increase of global public debt, along with a rebound of inflation, likely bringing buyers back into the market. Now, this chart, I don't think it gets bigger, but I'll show it to you anyway. This chart is a reflection of China's domestic gold prices over or under gold prices outside of China. So for all intents and purposes, this is China gold versus an index of gold outside of China. The index of gold outside China is COMEX plus or minus a premium, depending on where you are in the world. Now, for much of 2024, pretty much all of it, gold in China traded at a premium. Now, that's because they wanted the gold, and that attracted imports. Now, we are below, right? That's Chinese domestic gold prices. So the arbitrage is no longer there. You could theoretically say the arbitrage will come back the other way. That won't happen because gold that checks into China does not check out of China, nor do the people. You follow? Okay. If you want a proxy for what happened last year, now, Chinese domestic demand, little Susie Liu going out there and buying jewelry at the Shenzhen market, does not make gold go up. But her buying it is a reflection of China's government buying it, China's banks buying it, and China telling people to buy it. Okay, that's all BRICS stuff. That's all China de-dollarization stuff. Right now, they are not. Now, you can make the case that China is in trouble, and that's the case for their economy weakening and their de-dollarization has to stop, and they may actually be sellers of gold. I won't make the case that they're going to sell gold based on a news item that I got yesterday. Eric King Kong on X shared it with us, and he got it from a friend of his on a commodity desk. Basically, China's policies are reacting to restrict exports another time. Anyway, but look at that chart and you say to yourself, okay, well, gold has backed off. Now, this started backing off in July, but that's not the point. Is it leads, it lags. So we could be in the middle of that. All right. Why am I focused so much on China? Because that's what silver's about. Silver overview: a lack of supply growth meets strong demand. And that's the theme of the whole section, but I just pulled this one section out here. Quote, prices in China have traded at a premium for most of 2024, as shown in Exhibit 214 below. The backdrop in China has become even more constructive, driven both by demand and supply. China's silver consumption has strengthened on rising use from their solar industry, while production has slowed because the country's smelters face tight global mine supply, a theme they discuss in the zinc section. They break down how that works. Now, to put a finer point on the silver China supply chain, since many people here are physical silver people and industrially educated. If you have a smelter, a refiner, a manufacturer, factory in your country, and that country takes raw silver and refines it, and you're running out of raw silver, well, you have a factory that needs to do something. And if you can't find any more silver locally, and you've pulled it all from all your zinc people, because that's what China did last year. I remember when Bai and I talked about that. What you start doing is you start saying, you know what? We need to buy silver before it's silver so we can have our factories not just sit idle. We want people to work, right? And we also want to get better cost. So that's why they started up-ramping the purchases of concentrate. Because the factories, we already have the factory. Just give us the raw material. The whole market has flipped, okay? They're importing raw materials now and churning out finished goods in the commodity section. Okay, so that's how you make this make sense. Production slow because the country's smelters face tight global mine supply. Global mine supply. Okay, a theme we discuss in the zinc section. So here's that chart. Now there's a similarity here. They have the red circle. I didn't put that there. There's a similarity here between the fact that the silver premium has also gone slightly negative now. Now, I don't think that's negative anymore. The very end there, it's flat. I think it's positive again. The report discusses the difference between gold and silver from the industrial point of view. While the macroeconomic changes from Trump will cause some headwinds to gold, at least initially, it will cause tailwinds for silver. Because if the economy is going to boom, right, if we're going to have growth, you're going to use more silver industrially. If we're going to have more growth, it's not bearish for gold, but it's not bullish. You're going to take your money out of gold and put it into something that's going to create value, right? You're going to take your money out of the safe haven and put it into something that's going to generate wealth. Now, if we have stagflation, all that money goes back into gold. But if we don't have stagflation, all that money goes towards towards taking risk again. Right? And their point is, well, they think we're going to have a big boom for 2025. Next, and there's a ton more on that. But basically, let me just read this, and that'll make the point a little bit better. Gold versus silver. The gold-silver ratio is to fall by another 10 points, 75 or so, right? That's what they say. If they're wrong, they're wrong. If they're right, it'll fall by 20 points, by 30 points, because that's a statistical statement based on work that they've done. And I'm telling you, things always hit an ice patch and go further than they should. So let's read what they have to say about this. because for me, it's fascinating because they do have a quantified way to see what silver and gold should be trading relative to each other. And it has to do with manufacturing. Quote, investors took a more constructive view on gold when the Fed started cutting rates, although the expectations around the pace of monetary easing subsided after the Republican sweep. Now, when they say investors, they mean American investors, okay? The world was taking a more constructive view on gold when it started de-dollarizing. But this is about American investors, and it's spot on, right? This has also increased headwinds to silver. So as they sold gold, silver sold off too. You saw that, right? But the gold-silver ratio is bumping up against resistance, in my opinion. That said, and here's the key part, silver is more cyclical, reading more industrial. So once the dust settles, the white metal should outperform because it is key to the energy transition and also sensitive to manufacturing activity. So here's their analysis. Now, I haven't looked too closely at this, but there is a clear there's a clear pattern. Now, where you draw the regression line is up to you, but I'll read this. Headline manufacturing PMIs, Purchasers Manufacturing Index, and the gold-silver ratio in the past 5 years. So the gold-silver ratio are the dots, and the headline manufacturing is the R squared. Okay, so there is a definite correlation between manufacturing and silver. Right, so if the economy does well next year, and barring another pandemic, and barring a big mess up by Trump, silver is going to. I'm about to start saying, based on this and other work that I'm looking at, that last year it was like if you're bullish gold, buy silver, but be patient, or if you're bullish gold, buy gold, right? And I talk about this gold silver spreads. Well, if you're bullish gold, we're getting close to buying silver again. Close doesn't mean tomorrow. All right, so that's it. I mean, that's the beginning of it. It's a very good report. Okay. News analysis, the world did not end by gold. Well, we'll talk about that in a second. Judy Shelton interviewed by David Morgan. Yes. Market news I want to talk about first. Scott Bessent, everyone's talking about Scott Bessent. And in the context of the gold and silver market and commodities in general, let's just put it this way. Scott Bessent is about many things. We're talking about as he's being portrayed right now. Or historically how he is. You don't know how he's going to be. He's going to be for a strong dollar. He wants to be for a strong dollar. He's going to be pro-tariff, but he's also going to be for controlled fiscal spending. So if you're looking at it in terms of a bond yield curve, he's going to fiscally be more responsible. That's what he's portraying anyway, what's being said about him. And monetarily more loose. So less spending, right? More easing. And if you do less spending and more easing, generally speaking, that means a weaker dollar, right? But if you're raising tariffs, it's also going to mean a stronger dollar to counterbalance that. So there's a lot of needle threading here. There's a lot of details that matter. Raising tariffs is strong for the dollar, okay? And it's inflationary domestically. You're like, well, how does that happen? Well, we've talked about that before. It's not a big deal, but it's inflationary. But not at first, but it's inflationary after 5 years. Being fiscally responsible is bearish for gold, right? Being fiscally responsible is bearish for gold, but lowering rates is bullish for gold. So the question is, will they get their way, Trump Bessent, meaning will they be able to do what I just described, assuming they really want to do it? Well, the answer is they probably won't be able to do it until Powell's out of office. I think there's a chance he's going to be stingier than they want. So tomorrow, if tomorrow Trump stopped spending altogether in a Reagan-esque sort of thing, then Powell would have to ease. But in between the extremes is where Powell's going to say, nope, I want to make sure I get inflation under control. Anyway, so that's Bessent, and that's not why gold got hammered. Gold got hammered from a multiple. It's a constellation, right? It's Middle East peace. They ignored the fact that we didn't. Well, the fact that we didn't blow up Europe over the weekend. I guess that's a reason to sell. And Percent is good for bonds, good for Bitcoin, maybe good for Bitcoin, bad for inflation, and you get a lot of run-ups that are reversed on that. Okay. Uh, Personal comment about my portfolio, I'll also include at the bottom here to give you an idea like what I've done, how I've done it. I've shared a lot of it without getting into specifics, but to just give you an idea, since 8 days ago, I've been completely inactive in precious metals because I don't know what the hell's going on. Right? All right. President-elect Donald Trump plans to raise tariffs by an additional 10% on all Chinese goods coming into the U.S. That's here, according to a post Monday on his social media platform, Truth Social. The post immediately followed one in which Trump said his first of many executive orders on January 20th would impose tariffs of 25% on all products from Mexico and Canada. Trump is set to be inaugurated as the next U.S. president on January 20th. Set, oh boy, from CNBC. So tariffs on your neighbor is going to create a trading block, right? They're going to say, okay, we'll abide by the tariffs. We won't abide. We don't want the tariffs, so we'll abide by what you want. What do you want? Well, if I'm broadly speaking, I don't want any more immigrants, right? I want you to be responsible on your side of the border. I want you to do something about fighting fentanyl. So it's a war on drugs, right? It's a Reagan war on drugs. But key is China is basically colonizing Latin America. Okay, they're not just buying silver; they're building ports in Peru to have the silver and the copper and everything shipped to them. Okay, and then that means they're eventually going to have manufacturing facilities there. We're going to be making Chinese cars in Mexico, so we're going to tariff China, and Mexico is going to sell us cars. So there's going to be negotiations about that as well. And this is a protectionist error. This is, I'll say the word mercantilism, right? I mean, if gold weren't involved, I would just say it's protectionism. Next, Walmart is reversing course on diversity, equity, and inclusion initiatives. Reversing. Joining a growing list of businesses retreating on DEI programs, the world's biggest retailer will no longer consider race and gender to boost diversity when granting supplier contracts and stop collecting demographic data when assessing financing eligibility. Okay, that's disingenuous, the way it's phrased. Let's put it this way. We're not going to go back to ignoring people's race and gender. There's been a positive change that will come from this when the dust settles. But it goes from diversity is the most important thing to diversity is not the most important thing. Merit is the most important thing. You have to be good at your job, Case in point, I think it was Bloomberg or CNBC or someone, the headline about Scott Bessent was Scott Bessent, hedge fund manager, and gay man becomes Secretary of Treasury. And I'm like, well, what if he's incompetent? Will that matter? Anyway, that's just how I look at things. Okay, moving on. Data on deck, GDP, PCE holiday. Tomorrow is GDP and PCE. So tomorrow, the markets will probably die in terms of liquidity at noon after these numbers are out. And that's pretty much it. So let's look at the day itself. Yesterday. Okay, so what did I say? I said it would be nice if we stay above here in a new dead zone. We were like trading right there when I said it on the way back up right after the sell-off. And of course, we got a trend day lower and the market continued lower. So you're going to have dips being bought all the way down. We're in between these two. In my defense, right? What I did say is, look, second time down the 50-day moving average, it was bought. There was a wick there again. I was like, oh, look at that. Second time bought. I'm not so sure a third time would be bought. Okay. So now we're in between here. The 100-day moving averages, it's all about the 100-day moving average. Now, there's other ways you can look at it. You can say there's a line here or there's a trend line here, what have you. But it's all about that. But we're going to go back to something I said a week ago, starting with copper. Copper was below both moving averages. They're going to sell copper below that. Institutionally, they're biased to short it now. Silver in between, right? but now flirting again with the moving. Silver respected the 100-day moving average quite well, frankly, which means it was linking up with gold, which tells me that if copper continues lower, silver will crack before gold. Although on the way down, these two metals are pretty much neck and neck because there's just too many people that are long gold. Bringing us to gold again. So here's your new dead zone, right? I mean, look, I'm not trading it right now because I may see something tactically intraday to get bearish, and it is buy season. But sell season, they started buying during sell season, and buy season went before the election. We're in an unknown area now. Okay, I want to pull an hourly chart up for a second here to give you an idea of what happened yesterday. Starting with the dollar. The dollar weakened yesterday, okay? Because remember, this is Friday, right? Monday. Oh, the end of the world didn't come. We can get out of our dollars, we can get out of our gold, and we get out of our Bitcoin if we're long. Then we get out of our silver, right? And now we're going to get out of our dollars and we're going to put our money into stocks. And we're going to put our money out of gold and we're going to put our money into stock. And then the market started to do this at the end of the day on the hourly, commenting that Besant is bullish for the dollar. So I want you to look at it like this. The dollar probably should be a lot lower based on the end of the war, but Besant news was keeping it higher. So this market may have a lot more downside to the dollar, war-based. There's no war, or the war, the end of the world's not here. So we can continue to sell our dollars. But now it's running into the Treasury thing. And this is all headlines and stuff. I want to make it clear that there will be many 2025 reports that I'll be looking at. Some I won't even go through, but Bank of America's is the most objective, and we'll be doing a write up on that later on today, and founders will have an actual copy. Let's take a look at the table of contents, give you an idea. So there's their macro overview. There's like 250 charts. It's really, it's Thanksgiving reading, right? Energy outlook, crude, refined products, natural gas, industrial metals outlook, aluminum, copper, nickel, zinc. Read about zinc if you want to understand a little more about silver from a China perspective. Zinc is where they get their silver. Precious metals, gold and silver. Agricultural outlook, corn, soy, wheat, sugar, portfolio strategy, commodity balance tables, etc. So detailed breakdown and write up on the BOA report again today. And gold's bouncing up a little bit more. That's great. Have a great day, everyone.
Well, thanks for watching this morning's Markets and Metals with Vince Lanci. We sure appreciate you tuning in and starting your day with us here. Hope you enjoyed the show, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.